You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Well, let's find out together, shall we? It is time once again for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from the THEOptionsinsider.com, as well as from the network upon which so many of you folks are binging. And can I just say, so many of you folks are loving the new Futures show. I love that so many folks are enjoying it. It's great. You never know when you launch a new show, especially something that's a little bit outside of our core wheelhouse here, how the audience is going to respond. I mean, we've been doing this for a while, so we know we have a pretty aggressive audience. They want a lot of the content out there. But I've been just pleasantly surprised by how many people are really enjoying it. I was at an event last night. People were telling me how much they like the new Future show. So it's great to see. So if you're just listening to TWIFO, it is very much the sister program to TWIFO. So you should be listening to the full network. We get it all, including the Wednesday Futures Rundown. A lot of fun being had over there every week. Already nearly 2 months old. Crazy to say out there. But the latest show is definitely a little engine that could. Thanks to all the folks really out there who are tuning in. And of course, if you want to tune into even more fun content beyond just the on-demand side of the network, head on over to the pro, theoptionsinsider.com/pro. Get you 2 exclusive shows as well as giveaways, live streams, all sorts of fun, early access to great content. Lots of fun there. theoptionsinsider.com/pro. Speaking of fun, it's always fun when she joins us in the old CME Group Hot Seat. Our old pal, Miss Carley Garner from DeCarley Trading. Carley, welcome back to TWIFO, ma'am.
Thank you. It's good to be back.
It is good to be back as we kick things off with a little bit of the old movers and shakers.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we break down everything lighting it up to the light side and to the dark side over there at CME Group this week. And if you look at the chart, It's looking slightly biased to the red. I'm going to say 60-40 this week, even though our largest percentage mover by nearly 2x is to the upside. So there is certainly some green to be found out there this week, but not everything lighting it up out there this week. And one sector, one complex in particular, really taking it on the chin this week. But Carley, you've been on the show once or twice. You know how we do this dance by now. Do you think you're up to a little bit of moving and shaking, madam?
Sure, I think I can handle it.
All right, I'll let you start wherever you want, madam. The floor is yours.
Okay, we're going to start on the dark side. Energies are dominating the dark side, unfortunately. WTI is down over 7%. Natural gas almost down 7%. Heating oil and Brent also down around 7%. You might sense a theme here. And RBOB off only 6% for RBOB. Rough week for the energies, that's for sure. And on the light side of things, we've got Bitcoin leading the charge, up almost 13% on the week. Utilities sector comes in second, up 4.5%. Financial sector also up 4.5%. And then we've got the E-mini Russell and the real estate sector up 4% and 3% respectively. So to be honest, the light side is a little disappointing because they're markets that most people probably don't have a whole lot of exposure in. I'm not sure that's helping anyone out.
Yeah, not the sexiest light side this week. Can I just say, as an aside, whenever we toss to guests to do the movers and shakers, they invariably do what you just did, which is they start at the top of the list. Everyone does it. It's a human nature thing. It's kind of funny. Me, as the degenerate host that I am, I like to start at the bottom and build tension. But everyone else, including you are not alone in this, always jumps right to the top. It's like you open the big present first, and then you move on to the little stocking stuffers there at the end. I like it. It's just a human nature thing, Carley. You're one of many. All right. To the world of vol we go, listeners. Remember, you can run these reports for yourselves. Just type CME and CVOL into literally any browser. Should get you to the CVOL dashboard. Once you're there, you want to get the aggregate list. So click that aggregate tab on the right-hand side. Then you're going to make sure your high-low range is set to 1 week. So you can look back on 1 week. Of course, if you're going listening to this down the road a little bit, may have to adjust that a little bit. And then you'll see exactly what we've got going here on the list this week. Let's kick things off in the realm of FX. Don't normally start there, listeners, but we're starting there this week. FX CVOL 8.39, up 0.14 today, and has had a little bit of a range this week, which I guess for FX is saying something. 8.25 to the dark side, 8.46 to the upside, hanging out, like we said, right now, 8.39. Below it, we have the metals aggregate CVOL, 18.25 right now, up 0.08 today. And that's also the high end of its range for the week. The low was 17.71. Below it, we have the ag product CVOL, 19.34, up 0.03 today. And the range for the week, that is also the high for the week, the low 18.57. Below it, we have the aggregate commodities CVOL. So taking all those commodities, lumping them together, listeners, 36.87, off about 0.26 today. And that's also the low for the week. So we got very much a mixed bag. Some things pinning the needle to the upside this week, some others pinning the needle to the dark side. The high was 38.94 this week. Below it, we have the Treasury price vol, 7.36, off a third of a point today. That's hanging out towards the upper end of its range, but not quite pinning the needle. The high was 7.66, and the low for the week was 6.72. That's a fairly wide range for Treasury price vol. Below it, we have the energy complex vol. Interestingly enough, coming off this week, 57.83, off about 2/3 of a point just today. That's also the low for the week. The high was 62.87, probably set after our show last week. And at the bottom of our list today, we have the Treasury yield vol. If you're listening to the option block earlier, you know there's been some action on the Treasury side of late, and the yield vol reflecting that, 132.37, off 5.58 points just today. The range has kind of been all over the place this week as well. The high was 137.96 and the low 121.66. So a wide range for Treasury yield vol, as we've come to expect. We also expect when Carley is on the show, we're going to talk a little bit of energy. So let's kick things off there.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, to the very wild world of energy these days we go. Head on over to that drop down, cmegroup.com/TWIFO, TWIFO. May ask you to sign up for an account if you haven't done so already. It takes about 2 minutes. Then you have access to everything CME offers, so it's definitely worth it, and it's free. And then once you're there, you can get access to the awesome, if I do say so myself, TWIFO reports. Go into that asset class drop down, then go down 3 slots to energy. Gonna go down 3 slots more to kick things off. And Carley's favorite product, taking a bit of a whooping this week, it is nat gas, coming in number 2 to the dark side. In fact, as Carley broke down, it's been a while since we've seen the entirety of our movers and shakers in one side or the other, just dominated by one complex. But that's what we have with energy this week. They are taking energy to the woodshed. Like I said, RBOB number 5 off nearly 6%. Cost you 6% just to break into the dark side top 5 this week. That's a heck of a lot of dark side. And it's all energy from there. Brent number 4, 6.79. Heating oil, 6.81. Nat gas number 2, 6.9. Then our old pal WTI off 7.2%. And that is reflected, Carley, in this price. I mean, it seems like we were just threatening $3. Seems like just a couple of weeks ago. And here we are now, listeners, kicking off the show. $2.34, off another 28 cents or nearly 11% just this week. Of course, you go back to the end of our show last week, it's off about nearly 7%. Also delivering on the volume side. I think the call this week, explosive, is underselling it on the nat gas options side. You know, I've said before, we usually used to expect 400 to 450,000. Might have to amend that now because we're seeing a lot more paper on the tape these days. Threatening 1 million contracts right now, 949,000 contracts. So you got more paper going up in nat gas than probably all of the precious metals certainly combined, and probably some other aggregate complexes combined as well. So nat gas definitely lighting up the tape out there. Carley, it's been an intriguing week. We were threatening 3. It seems like the last time you and I chatted, we were hanging out at 3. What's going on? What happened in nat gas, Carley?
I mean, this is a textbook seasonal sell-off. We had a big rally in September as everybody was kind of preparing for the winter weather. And what generally happens, it's hard for people to imagine this, but what generally happens is the market prices in all the winter weather in advance, and then we spend most of the winter kind of giving that price advance back. Because a lot of times the winters are, I don't want to say mild, but they're within expectations. They're not outliers. And so we generally get this sort of thing. It usually happens a lot slower than what we're seeing. This is a seasonal pattern on crack. But with that said, it's actually relatively normal. I will say that we probably aren't done. Believe it or not, I think the front months could get pretty close to $2 before we really find some good support. So if you're going to try to play the long side, probably do it with the back end, maybe like the April contract that's after the season, the shoulder season. Otherwise, just be very patient and keep it small because there's more likely more pain to go.
A seasonal pattern on crack. I think we might have our title for our episode here, Carley. Tell us how you really feel about this. You're right. It does seem like they have been inordinately aggressive in the last couple of weeks and just cutting the legs out from under nat gas. So maybe not the time for your beloved upside risk reversals or ladders, Carley. What are you up to out there?
Not yet. I mean, the algos are pretty aggressive in this stuff, especially it's a little bit thin. Risk reversals are going to be something that we'll consider, at some point down the road, like I said, from lower prices. But for now, if you must play the upside, probably just buy some cheap calls. That way you get a foot in the door and you don't have to stress yourself out because it's, I've seen this movie before and we're probably not done. So be very careful trying to have open-ended risk on the downside.
I don't know if there is stress-free trading in nat gas right now, but let's see if we can find some, Carley. Let's go out here and the leading culprit out here. Listen, like we said, nearly 1 million contracts on the tape. 53% of that going up in the contract that expires in 11 days. So fairly near dated, all things considered. What is the vol out there in that contract? It's at about a 59.25, off about almost a full point on the week here, listeners. So intriguing stuff out here on the nat gas front. Let's look at the skew. And you might be thinking, the puts would be bid to high heaven given this aggressive sell-off we've seen out here, but the answer is no. They weren't that bid last week. They were kind of flat, 0.7%. That was clearly not the right bias out there, and they're kind of even flatter this week, 1.2% discounted. They swung a little bit to the other direction. Now, some of that is, of course, we're breaking through some strikes, so the skew is rotating a bit, but still, You might expect people to be trying to catch that falling knife, and yet we're not really seeing that. In fact, if there's a bid to be found in the skew out here in November, it is on the call side. They were 1.4% bid last week, 4.1% bid this week. Carley, does that surprise you at all that we're not seeing a pronounced bid for the puts? In fact, if there's any bid, it's to the calls right now?
It does surprise me a little bit. For whatever reason, people have a hard time letting go of what happened in 2022, 2021, when all heck broke loose on the upside. But I think that those days are behind us, in my opinion. So I think it's best off to not try to buy lottery tickets on the call side, at least not regularly. It's going to be an expensive endeavor.
Yeah, I have said it before. There have been new people. I mean, we're seeing it on our future show. There's many new entrants to these markets right now. And a lot of them have, let's say, a skewed frame of reference, Carley. They came in post-Ukraine when they saw things like nat gas and crude and wheat just go crazy. And so that's their normal market. They think nat gas has a normal range between 3 and 10. so that's going to...
Well, yeah, I think what a lot is... I hear this a lot, and I've seen this a lot online. There's a lot of people looking for like a second wave of inflation. Maybe that happened, like something like we saw in the 70s and 80s. People think we're going to get a repeat of 70s and 80s. It's possible. I will never say something is not possible, but the reality is we're so much better at producing energy, fracking. We're just so much more efficient at producing grains, energies, whatever commodity it is. It's hard for me to imagine a repeat of the 70s or 80s where we got that double whammy of inflation. But then again, anything is possible. So we'll see.
And what is possible out here on the nat gas options front? If you like yourself some downside puts, we got the show for you listeners. 2.25 puts in November. So going out in 11 days, leading the dance this week. Just ticked over 60,000 contracts for this week. So that's probably as much, if not more, options that are going up in, let's say, silver right now, just in these 2.25 puts in November in nat gas, kind of evenly spread out throughout the week as well. The big day was Wednesday, 19,200, mildly closing there, 13,000 and change each Monday and Tuesday, back and forth opening to closing on those days, and then 14,000 today against an OI of 48,000. So there's still some size OI left on the strike, even if folks were bailing on Tuesday and Wednesday. And then right behind it, we have, well, actually, before we get to the 2 puts, is actually number 2 would be the 2 3/4 calls. So kind of going back to what I was just saying, there is a surprising and perhaps some might say stubborn bid to these calls. Maybe it's because these 2 3/4 traded 53,000 times this week. The big day was Wednesday. My goodness, 36,000 of the 2 3/4 calls in November going up on Wednesday. Listen, again, these have 11 days to go. If you're buying them, you need about 35 cents just to hit your strike in November out here, and that was mostly opening too. That was the big day of the week. About 8,000 on Monday opening, 4,300 on Tuesday opening, 4,800 today. There's 33,000 open on this strike right now, so there's some size. I don't know. That could be why we're getting this little bit of a bid creeping up in here as well. That would kind of imply to me that folks are buying these. I don't know, Carley, 11 days to go. November 2 3/4 calls. Are you a buyer of these? I mean, it seems like somebody is.
I'm not. I wouldn't be a seller either, simply because the risk and reward's not there. But I think that's going to be a tough play.
Yeah, it's one of those options. It's kind of hard to do anything with. You don't really want to buy it, and you probably don't want to sell it. You're right either. So, somebody wanted them, especially on Wednesday. A boatload going up on Wednesday. So I don't know, listeners, you down for a little 2 3/4 calls in nat gas? I guess if you're a believer in what we were seeing back in 2022 and 2023, then maybe you think this is crazy cheap. 11 days though, you're not giving yourself much time to work. Help yourself, give yourself a little bit more time. But hey, c'est la vie. There could be size overriding these as well, but the skew doesn't seem to be backing that up. It seems like they are buying these. And then behind it, number 3, we have the option you probably expected. The 2 puts in November, 46,000 of those this week. The big day was Wednesday for those as well, 24,000. So someone could have been taken off a vertical on Wednesday, 2/4, taken off both legs. That would certainly make some sense if you were long that. You're racing towards those strikes. Get the heck out of Dodge. Take your money. Live to fight another day. Also, eerily similar paper today, 14,000 on the 2/4 puts and close to 14,000 on the 2 puts today. So they could be unwinding or rolling today as well. 6,500 the two puts on Tuesday, 2,000 on Monday, opening both of those days. The OI on this strike now 62,000. So more OI on the two puts than the two quarters. So that would also maybe show that some folks are playing the rolling game. Let's get out of the November contracts and let's go explore a little bit, listeners, shall we? See if we can find some other funky paper to make Carley shake her head. How about this, Carley? How about March of next year? That futures at 279. How about the 6 calls? Somebody traded about almost 8,000 of those this week. Are you down for a little 6 calls March of 2025, Carley?
I mean, maybe somebody knows something that we don't. I don't know, or we're doing it wrong or something. I'm not sure, but it doesn't make a lot of sense to me. I will say that because of what happened a few years ago, when people hear war and conflict, regardless of where it is in the world, they seem to think that means higher natural gas and oil prices. Most often, that these types of geopolitical events don't impact supply at all in the energy sector. Occasionally they do, like we saw a few years ago, but I think we're still running on the fumes of Nord Stream pipeline being blown up, and it doesn't make sense to me. But then again, what do I know?
I know it's only an audio show, listeners, but I swear I can hear her audibly shaking her head when I tell her some of this paper,
Yes.
which is kind of the best part, which is why I look for it here, listeners. So yes, we've got some funky upside. They traded 7,700 times this week, 4,500 times today against an OI of 28,000. There's 28,000 of the March 6s open right now. I have to believe some of that is vestigial paper from, let's say, the before times when things were a little bit wonkier. Also worth noting is about 14,000 of the 5 calls open right now. So maybe some 1x2 action. It does line up kind of nicely. They traded about 4,000 times this week, including 2,500 times today. So maybe there's some related paper, 5, 6. It's not going up. If it's going up on a ratio, if it is going up, though. Buying 1, selling 2, I don't know. That's an intriguing way to go. Maybe you got some futures in your back pocket against that. But an interesting week out here in nat gas, but we got to keep on rolling in the energy complex out to Carley's other favorite, and indeed our number 1 dark side mover this week, off 7.2%. It's our old pal WTI. Carley right now is just tick below the 70 handle, 69.97, off nearly $5 this week, 4.90 or 6.5%. Carley, we had a guest on our futures rundown program yesterday, and we were talking about crude oil and energy, and he was saying, if you had told him all of these events we have playing out right now at the beginning of the year in a vacuum and said, hey, we have this unrest in the Middle East and all these other things, hurricanes, all these other things that are potentially lead to a lot of upside in the energy market, and then you say actually crude and nat gas would be selling off pretty aggressively, he would have thought you were a crazy person. But that's where we find ourselves, Carley. Right now, crude oil threatening and breaking the 70 handle right now as we're speaking again. So what are your thoughts on all this downside we're seeing yet again in WTI?
Well, I think there's a few things that happened here. We had such a massive rally on the initial news a week or so ago of fresh conflict overseas. I mean, we went from like 66 to 78. So we're talking like roughly a $10 to $12 rally, depending on which month you're looking at. That's pretty sizable. And the problem is, though, a lot of people were chasing prices higher, and then they found themselves in a situation where it wasn't very comfortable. And then I think we're seeing liquidation of that. I also think, I don't know if this is going to be popular to say, but if you notice some of the other markets, the markets are pricing in a Trump victory. I'm not saying that's good or bad. I'm just saying that's what's going on. Like you're seeing treasuries sell off because the idea is inflation might pick up because of the tariffs. I'm not saying that's going to happen. In fact, I think we might actually get the opposite of what the markets are expecting in most cases. But with that said, I think what's happening is a lot of the selling in oils because the idea is a Trump victory would actually increase U.S. production and put pressure on oil prices. That's the thought. That's what I'm hearing on the street. Take it or leave it, believe it or not. But I think that's what's going on. Crude oil has a little bit of support here around $70. If it fails, we're probably looking at 63, 64. Seasonals are bearish. So I'm not in any hurry to get bullish here. I'd like to see the low 60s before I do something aggressive, but we'll have to see how it plays out.
Yeah, if past is prologue, you're right. The election markets have definitely swung decidedly towards Trump just in the last week, which is interesting. If past is prologue with Trump, I guess the one thing we can expect is to expect the unexpected, right? I mean, last time he won,
right.
Everyone and their mother on this network were saying buy vol. The one thing
right.
Trump is not is a single-digit VIX president. What happened? He got into office and VIX went to die. It was single digits for most of the year. So I guess expect the unexpected when he gets in the White House. But, you know, it's kind of interesting looking at all this, like we said earlier, this unrest in the Middle East, this turmoil that we're still waiting for the Israeli response to Iran. They've supposedly pledged not to target energy infrastructure, but you never know with these things. There is, of course, ongoing, stuff with Gaza as well as Lebanon. So the potential for things to spiral out of control is still there. Some people might think we're kind of whistling past the graveyard, just crushing all this crude oil so aggressively. Maybe it's reminiscent of everybody crushing vol and the euro ahead of the Brexit vote and the pound. And oh, wait, it is going to happen. Are we looking for one of those? Are we whistling past the graveyard in crude right now, Carley?
We very well might be. Yes. I mean, I think the one thing that I know is that I honestly don't know. We're kind of taking the next, currently, and the next couple of weeks, we're working on getting less involved in the markets and just waiting to see how it unfolds. Because I think that we're probably due for some pretty good chaos here in the next handful of weeks.
Not the worst time to maybe let the powder stay dry for a little bit and sit on the hill and let the tigers fight, as the old saying goes. Let's see what's fighting out here in crude oil this week, listeners. Is it a banger week? Yeah, the answer is decidedly yes. Again, crude oil used to be in that range, 450 range for an average week. 682, about 682,000 contracts on the tape right now. So a pretty active week, closing in on 700K. Again, is to be expected when we see this kind of action out here. Did you have a below 70 handle in WTI this week? Like somebody did. 53% of that paper. So a surprisingly similar percentage to what we saw in nat gas. Going up this week in the D's contracts, going a little bit longer term this time, 29 days. Compared to nat gas, everything was going up in about 11 days. That gets us again to the D's contract. That vol right now, about 40.5, coming in aggressively. So when I mention things like whistling past the graveyard, it's stuff like that, where they are just whacking the hell out of this vol. 40.5 off 7.6 points just this week. You're really getting pretty complacent if you think you're taking... You can maybe argue vol got overbid. Sure, that's fine. But 7.6 points in a week, that's a lot to take off the top with things still unfolding in the Middle East. The puts last week, 3.5% discounted. So nobody wanted puts last week. That was the wrong play. And then this week, people want them even less, 6.3% discounted. So if you're looking at these skews, WTI even more so than nat gas, you would think we were poised for some immediate retracement to the upside. The calls last week were 6% bid. No bueno there. This week, they're doubling down, 12.5% bid. So folks want the calls. They don't want the puts. Again, the market not backing that up at all. The market has shown no reticence at all about crushing WTI and crushing the vol, which, if past is prologue, might be a little bit of a recipe for disaster. We've seen people doing this before big elections, before Brexit, and then look what happens. We have no idea what the outcome is going to be. What, a week ago, Harris was leading in everything, and now it's swung. So the notion that we know anything this far out is always kind of laughable to me. But let's dig into some of this paper. To the 80s we go in December, listeners. They traded 24,000 times this week. That is your big dog in WTI this week. Looks like folks were mostly bailing on these, which, again, makes some sense. We have gotten the heck away from that 80 strike pretty aggressively. The big day is actually today, 6,500 against an OI of 22, almost 23,000. Actually, I take it back. The big day was Tuesday, 8,600, mostly closing there. 6,500 today, 5,500 on Wednesday. The only opening day was Monday. So folks were getting the heck out of Dodge on these 80s. Right behind it, we have the 85s going up 23, almost 24,000 times as well. They line up pretty well, especially Tuesday. 8,500 going up with the 85s on Tuesday as well. Looks like slightly opening there, so it'd be a strange day to choose to roll from your 80s up to the 85s, if that was the case. But we've seen wilder things. The fact that the skew is also so aggressively bid means to me, even if they are closing these, maybe they were overwriting these because they're buying them back to close. Either way, that skew is getting highly jacked out there right now. The 8,400 of the 85s trading on Tuesday, 5,700 today against an OI of nearly 30,000 on the 85. So still some size OI on the 35s. 4,500 on Wednesday and 4,600 on Monday. Carley, we're seeing similar stuff in WTI to what we're seeing in nat gas. Neither the skew nor the paper seems to be lining up with the price action we're seeing out here. It seems like people are just, there's like, okay, buy the dip. It's like the meme stocks all over again. Carley, what do you think?
Yeah, no, I agree. I think people are programmed to do that. Because to be honest, crude oil, any large dip has kind of rewarded call buyers. So I can see why they might want to do it. But 4 weeks ago, we were at a very low volatility environment, and now we're in a little higher, even though it's come off. So I'm not sure they're going to get the same type of pop. Even if we do rally, I don't think these options are going to really do much for them, to be honest. Like I said, we're sidelined. I'd love to see much, much lower prices in oil before I get aggressively bullish or do anything with it. And again, election's a crapshoot. One thing I will say in crude oil, we've been mostly trading sideways for a very long time. Equilibrium's about $80 a barrel. We're in the monthly trading range. Support comes in right around 66, 67. So we're holding that support. But the problem is the only other time we've broken this support line in the last 15 years is COVID. And when we broke, it was like a watershed move. We all remember what happened. Oil went negative and everything. So this is a very critical juncture. If we don't hold here in the next, let's say, month, if we do fail, it's going to be really nasty. So you want to be very careful if you're someone that sells puts or sells premium down there. Be very careful because we're just kind of on the cusp of normal correction versus something much, much bigger.
Well, if you were lukewarm on those, Carley, you're going to love these. Someone going out today to February of next year, trading 18,600 of the Feb 90s. Today. The OI is only 3,800, so they're clearly opening on those. I was trying to scan to see if I could find a price on these. I don't have a price, but I don't know, Carley, Feb 90s, is that floating your boat? We'll see. If support holds here in the next month or so, 90 is in play. By February, probably not. I think it would be more of a mid to 2025 story if that was the case. But, things change very quickly. So, yeah, obviously they didn't go up as a block. I was trying to find the prices here, listeners. But intriguing stuff. I just like making Carley shake her head. That's kind of half of the fun of doing this show. Let's see. We're already halfway done with the show. We've only kind of done energy, but we could probably do the rest of the show. There is enough in the energy sector. We've got Bitcoin lighting it up to the light side. I'm not sure, you're not really a big crypto gal, Carley. So what else is lighting up your tape this week you want to talk about?
We've got our eye on treasuries and grains. We're starting to buy cheap calls on the grains if you're interested in talking about that.
All right, then to the world of ags we go.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, to the world of ags we go. The nice thing about ags is they're really easy to find. Right at the top of the list. You can't miss them, listeners. So go up to that top of the list. Then in product family, you're going to go to grains and oil seeds. Then it's Carley's ball. We go wherever she wants from there. You want to talk wheat? You want to talk beans? You want to talk corn? What's floating your boat this week, Carley?
We're watching corn.
All right, to the world of corn we go. The big dog in the ags complex this week, listeners. Looking a little bit smaller this week, 406 3/4 off $9 or a little over 2.16%. Most weeks that'd be closing down 3%. You probably have a chance to break into our dark side, but not this week. Tossed you nearly 6%. It was just an energy just dominating the dark side this week, listeners. But you know what? They're not dominating the tape. Corn putting up some numbers this week as well. Usually, again, somewhere around that 400, maybe 450 range for corn, and right now 570,000 contracts on the tape. So a pretty active week for corn. And Carley, it sounds like it's been an active product for you. What's catching your eye out there in corn this week?
Right. Well, we came 3 or 4 weeks ago, we had one of the, well, let's just say a month and a half ago, we had one of the largest net short positions in corn than we'd seen in a while. And we've, the market since basically unwound a lot of those shorts, and we're sitting on a relatively neutral stance. But corn around $4 is starting to get attractive. Now, I'm not saying this is a bet the farm type of, no pun intended type of level, but this is a place that we think it's worth starting to nibble. Like, we've washed out a lot of the froth. We've washed out all the excessive positioning. And now we're sitting here on a relatively supportive area, $4 in the December contract. And if it holds, we could get a pretty nice rally. Now, again, just like in the energies, $8 corn, $7 corn, forget about it. But if we could see $4.50, maybe even $5 if there's a weather scare, that would be a victory for anyone that's bullish corn. So what we're doing is buying July calls. You can get them real cheap. Just to give you kind of some examples, 460s, 470s, 480s for less than $1,000. You can get in the market for 246 days and with low and limited risk. And the strike price isn't that far out of the money. For example, the 470 calls are only 40 cents out of the money. We were just there 2 weeks ago. So it's very doable. It's a cheap way to get in without risking too much. And you have lots of time. Anything can happen in 246 days in the commodity markets.
But Carley, haven't you gotten the memo? You're supposed to spend all the money and give yourself 3 days in this market. Maybe one day. You're going out 260. What am I going to do with all that time? Just twiddle my thumbs?
Right. Yeah, I haven't had any luck with buying options with a couple days to go. I mean, I know it can be done. It's more of like a day trading type of thing. That's not for me.
I like that. 260 days. That's a lot of time for stuff to happen
a lot of time.
in the ag markets, listeners. So intriguing stuff. So if you like yourself a little bit of corn upside, maybe July is the way to go as we go out to see what's lighting up the tape out here this week. Like we said, a pretty hefty week. Almost 570,000 contracts on the tape. 40% of that going up in the D's contract has exactly 36 days to go. We're going to hang out there. You might be asking, what is corn vol right now in December? And the answer is it's fairly frothy. 25 and a quarter, up 8 and a quarter points. Wow. This corn vol is all over the place. You go farther out in the term structure out into next year, and the corn vol is in the toilet, 14, 13 points. But in the near data, again, we know ags kind of play by their own rules of engagement. They're very seasonal, and right now the vol and Dees are looking pretty frothy, 25 and a quarter. Let's see if the skew is delivering something similar. And the answer was yes, at least last week. The skew was pretty wild last week. Last week it was all upside all the time. The puts were 10.6% cheap, so nobody wanted to touch the puts. This week they are literally flat. There's no bid, no discount in them at all. So all that's gone, all that discount. Last week the calls were 6.4% bid. This week 3.9% bid. Again, another kind of interesting skew, setting up with a huge discount to the puts and a bid to the calls right before a pretty aggressive sell-off. So, as we always said, skew is not a crystal ball. It's not going to tell you exactly where the underlying is going to move. It just shows you how the options market is positioning ahead of that. And so far, in all three markets, they're 0 for 3 on the skew front. They're not catching any fallen knives. They're selling more into them. In terms of the size volume out here, looks like it was the $4 puts, the par puts lighting up the tape out here this week, which again makes some sense. We're hanging out 406 3/4 right now in that front future. 25, almost 26,000 of these $4 puts going up this week. The big day was Tuesday, 10,000 on the tape then, mostly closing then. We've got 5,000 each yesterday and today. Obviously, we don't know today's. But the OI is 33, almost 34,000, so there's still more to go if they wanted to close. And then 5,300 on Monday as well, slightly opening there. I'm looking, and then actually it doesn't line up with any other puts there, so it doesn't look like there's a lot of rolling paper, which you might expect. In fact, number 2 actually were the calls, the 430 calls. Again, in December, going up 23,000 times this week. Looks like folks were bailing on those all week long. 10,000 pretty much exactly on Monday, closing on those. 6,100 on Wednesday, also closing. 3,100 on Tuesday, again closing. And 4,000 today against a remnant OI of about 29,000. So folks getting the heck out of Dodge on some 430s to the upside. And maybe rolling some of those down, though, because we have the 420s also lighting it up to a similar amount, 21,000, about 500. And it looks like it does line up a little bit, at least some of the days. Wednesday, we had about 6,000 of the 430s closing. We have about 6,000 of the 420s going up the same day. Again, also closing. So it could have been they just take off the full vertical, not really a roll. We have on Monday, we had about 10,000 of the 430s going up closing and about 5,200 of the 420s. So if they're rolling, it's not exactly a house money roll. Usually you see it the other way if it's a house money roll, which is they're doing 2 on the second leg versus 1. They got some money in their pockets. It doesn't seem like that's the case here on Monday. And then we had about almost 7,000, 6,600 going up on Tuesday. Doesn't really line up with anything on the 430s. Again, so 420s and 430s on the call side and 400 puts on the downside. Again, all in Dece. If we go a little bit farther out, though, let's see if we see any other interesting or funky paper. We've got 440s in February. That futures at 421. They traded 6,300 times. The 4 halves going up in March. Not quite in Carley's time frame, but getting a little bit closer. They traded 15,000 times this week. So future at 421, 4 halves. Maybe if Carley is going out too far for you, or if that's too pricey, then maybe the 4 halves are closer to in March, will be more suitable for you. And then if that's not enough, let's go out all the way to Dece of next year. Someone's trading the $5 calls about 1,300 times this week. So intriguing stuff out here in corn. But speaking of intriguing stuff, we got some intriguing stuff from our listeners. Let's get there now. A little bit of the old futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, let's get to the futures options feedback. Got a fun one this week. And actually, our producer surfaced it earlier this week on our Pro Q&A, just because they thought it was kind of germane to what we were talking about there. And they mentioned our futures rundown, so it did kind of come up on our futures rundown show yesterday. But I know so far we've had 2 guests take bites at this, and they've come up maybe a little bit short. So we'll see. We were saving it, though, for this show because it is a futures options question at the end of the day. So this is where we will get the ultimate answer. I got a feeling Carley, as our broker representative, will have some more to share on this. But this question comes from Ian Wagner. He says, really loving the new futures rundown. Thank you for adding that show! Exclamation point. Well, thank you, Ian, and everyone else who's listening and taking the time to write in. The numbers have been great. The feedback has been great on that show. So we really appreciate all of you taking the time to listen and indeed write in. Thanks to all of you folks out there. He goes on to say, my question is about futures options. So he writes in about the futures show, but he's got a futures options question. Hence why we're talking about it on TWIFO, listeners. He says, futures options daily settlement and when the contracts cease trading. Can you give us an overview of how settlement works for crude and nat gas versus the major equity indexes? For example, I think WTI and nat gas stopped trading at 2:30 p.m. Central, but do they also settle at that time? I believe the E-mini, the NASDAQ, and the Russell 2000 stop trading and settle at 4 p.m. Central. Thanks. Well, Carley, I can't imagine a question that is more up your alley. You love yourself a little bit of nat gas and some crude, and you like dabbling a little bit of equities as well. So like I said, you're our broker. This is your question. Have at it, madam. The floor is yours.
This is a very tricky topic because, first of all, there's a lot of things going on here. If you remember back in the day, there used to be pit sessions where people traded open outcry options and futures, and then there were also electronic sessions. Now there's just one big electronic session, but the exchange uses the settlement time based on when the pit used to close. So wrap your head around that. And it gets very complicated because each pit used to have different closing times. So if we're talking about gold and silver that are traded in New York, those were settled at I know I'm Pacific time, so I know everything my time, but basically it would be 1:30 Eastern is what it works out to. Natural gas and crude oil, they settle at 11:30 my time, so that's 1:30 Central. So if you look at your account statement at the end of the day, the settlement prices that determine whether or not you're on margin call or off margin call of what your account value is on your statement is based on those settlement prices that occurred when the pit normally closed before the pit was abolished. So the confusing part is those markets all continue to trade. Most markets, including crude oil and natural gas, S&P, NASDAQ, all of those, even currencies and treasuries, they trade until 4 o'clock Central Time, 4 p.m., and the options and futures all continue to fluctuate. But anything that happens beyond the settlement time, which is when the pits used to close, it occurs and they're real trades. And when the markets reopen, they generally reopen where the electronic sessions stop trading, but they're not officially recorded on the statement. So it's really confusing. And one more thing, options don't trade as fluidly as futures do. Any particular option might trade once a day, it might trade 10 times a day, might trade 20 times a day. Sometimes when the settlement price time comes around, that option hasn't traded in hours. So what the exchange does is they settle it based on theoretical value plus or minus some sort of fancy calculation that they probably do. I've seen the exchange settle options much higher than I thought they were probably fairly valued and much lower. So I'm not sure exactly what the calculation is, but beware of that as well.
Ah, yes, the joys of old school pit trading, which has been mostly abolished, but still dictating how we settle these contracts, Carley. Always fun. Always fun. That kind of leads to the same advice we give around VIX options, which is if you don't have to ride the position through settlement, maybe close it out so you can avoid that. Oh, wait, why did they settle it there? Which everyone gets angry, right? You guarantee you're not going to be happy with the settlement. If you're long the contract, you want them to settle it higher. If you short it, maybe you want them to just leave it where it is, or settle it lower. No one's ever happy with the settlement, Carley. So save yourself that headache. Close it out ahead of time. That's the best advice. But yes, the devil is truly in the details with these products, Carley.
Absolutely.
All right. Well done. A great question there. Who was that? Ian. Good question there. Love to see our listeners, even some of the first timers, coming in with such awesome, nuanced questions. That's what the world of futures brings us, listeners, and futures options. All these crazy fun nuances that we're going to spend a lot of time sinking our teeth into, both on this show and, of course, on the new edition, the Futures Rundown. Unfortunately, that music means we come to the end of another fun sojourn through the world of futures options. Carley, thank you for joining us and for tackling that very highly nuanced question from our listeners. In the meantime, in between episodes, or I should say your appearances on TWIFO, folks want to hit you up with equally head-scratching questions. Where should they go? What should they do?
All right, they can find us on the web at DeCarleyTrading.com. It's DECARLEY trading.com. We're also on all the socials, so just search for DeCarley Trading or Carley Garner. Make sure it's a legit profile, though. There's a lot of fake scammers out there. You got fakers?
Yeah. Really?
Oh. Yeah, it's no fun. And They're scamming people out of money, but it's bad.
Make sure you get the legit Carley.
Yes.
Accept no substitutes, listeners.
Right.
If they're not talking nat gas ladders and all kinds of fun, you don't want anything to do with it. Just say, hey, you're a scammer. If they're trying to get you all in on Bitcoin and maybe Doge, probably not Carley. All right. Good stuff. Check her out over there at DeCarleyTrading.com. Maybe check out some of her books while you're at it as well. Trading Commodity Options with Creativity, Higher Probability Commodity Trading, or A Trader's First Book on Commodities. And of course, you know where to go to check out all these reports we're talking about during the show for yourselves. CMEGroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires. That's going to do it for us on the network today. Back again tomorrow with Carley's nemesis in hand. I do believe Dr. Vix will be joining us on VolViews tomorrow. If his plane lands in time, he'll be rushing home from the CBOE Risk Management Conference to give us all of his updates on the show. That should be fun if he can make it in time. So stay tuned for that tomorrow on VolViews. Also have Options Oddities coming for our pro folks between now and then. Stay tuned to theoptionsinsider.com/pro or to your pro podcast feed if you're already a member. to see when that's hitting your device of choice. Then, of course, we're back on Monday for the option block and the crypto rundown, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.